You are fully right. I mean, that's the use case. Yeah.
We have, I don't want to bore people to death whenever we talk about regulation. So much falls outside of our control. There are, but obviously, I think I would like to get just your opinion in terms of, because you've had experience getting licensed and interacting perhaps with local regulators and stakeholders, constituents, and whatnot. How do you see that the regulatory environment, kind of broadly speaking, but also, maybe if you could offer us kind of, even if things don't change or we don't get clarity for another couple of years, like what does that mean for you guys and your ability to execute? Because I think that like the value proposition is very strong at times in crypto, but unfortunately, a lot of times I've just seen businesses say, "Listen, just come back to us when there's clarity, and I know that I can like interact." And there's a lot of perhaps like career risk still in crypto. Uh, do you believe that? How do you see the regulatory landscape evolving, particularly for your type of business and use case? And yeah, maybe offer some insights there would be great.
I can take that, at least for ARF. Basically, we are in Switzerland, and in Switzerland, even Bitcoin is fiat. So, well, we have lesser problems there. In terms of regulatory environment and even accounting, I think it is one of the good jurisdictions if you are basically doing everything right. And we prefer to be regulated, and we want it to be regulated because in the end, we are dealing with highly regulated cross-border companies. So this is a must for us, and this is our choice. And we want to keep it that way. And we even want to basically upgrade our license, which will provide us some kind of a semi-banking license. So these are the short to mid-term goals for ARP. But what I want to say is, basically, the money flows, at least we are seeing, is from the developed countries to the developing countries. And in the developing countries, always the regulation is much more pragmatic and much more efficient. For example, even in Philippines, you will see that you have money transmission licenses and basically OTC brokerage or basically crypto licenses may come hand to hand. Even one company can have the both. So developing countries are basically flexing their muscles more and more. In the current regulatory environment, basically, USDC is a very credible asset. There is no problems using it from our perspective. So we expect things only to go better in if we were looking at globally. And for our perspective, we even want to be regulated more and more. It's not a burden, but it is a good part of the business for us.
And I can also add some notes here to our perspective. As you said, Santiago, we have some troubles, and we had our troubles by working with some clients. Some of them from the US, some of them from the UK. It's mostly dependent on the banking relations and the risk appetite of the financial institutions. They are willing to work with us, but they cannot really touch any stable coins. That's why we are also a regulated company, financial institution. I mean, if it's like that, we can also have them isolated from touching any stable coin or crypto or any digital asset. And they can only, if they prefer for the time being, especially for a limited time, I can say. It's not our optimum ideal business model, but we definitely understand the concerns, and from the regulatory perspective and the banking partners perspective, so we can isolate them and have them only repay us in fiat. Let's say a US money transfer licensed entity wants to work with us, but they don't want to touch any stable coin or digital assets. We can say, hey, we can do it for you. We provide the liquidity to your partner or whoever it is, the responsible party in the other corridor, and you just repay us in fiat. So, but step by step, we improved their ability to and risk appetite from fiat to stablecoin. So this is what we call our adoption, stablecoin adoption program.
Yeah, one thing to add for both ARF and Huma platform, we only deal with stable coins. At this moment, we only deal with USDC. So we have been very intentionally only support stablecoin, which invite a lot less complexity in terms of regulation. That's number one. Number two, given that we only deal with business lending, no matter no matter it's ARF or some other partners in Huma platform, since it's business lending, all the local business needs to know the funding source. That means we actually end up doing KYC from both borrower and lender perspective. That make ourselves regulation exposure to be much lower than many other crypto projects. In a way, another dimension is that, as I mentioned earlier, we invite compliant, we invite regulation, we work collaborative with different parties so that we believe only with stronger regulation, clear regulation, will enable faster adoption of this innovative product.
Yeah. I wanted to go there maybe as kind of a last question, and then maybe if anyone in the audience has questions, feel free to just raise your hand. Obviously, we've seen different types of stable coins. We have USDC, as you mentioned. It's probably the most adopted in terms from a business standpoint. Do you foresee? But yet again, like some Tron native stablecoin is probably the most widely used in emerging markets. Obviously not for business transactions, but you have Tether as well, which is where most pairs in DeFi and then exchanges kind of are traded against. How do you this setup? I'll just say how do you think about other stablecoins becoming important? You mentioned central bank digital currencies, but there's a bunch of other flavors of stablecoins that have been tried. But I'm curious if you think that anything else other than USDC, maybe Tether, maybe something else can really become part of your network and something businesses kind of want to interact and transact with.
So one area we're definitely very bullish on is the stablecoin from Hong Kong. Hong Kong government has been very, very supportive of overall crypto, particularly about stablecoin. They have very clear direction about what will be towards stablecoin approval, and several parties already getting to the sandbox, and we expect they are going to start to kick off different programs. We're in close discussion with some of them, potentially participating in their sandbox as well. So that will showcase the case to the Hong Kong government potentially for wider adoption. We expect probably in 2025.
Yeah, we always talk about this as a question to ourselves, is how likely it is that the whole world will just settle in one currency. The answer to that, that we come to every single time is it's very unlikely. There's always going to be, different jurisdictions with different monetary policies that are influencing their stablecoin regulations that will force either the central bank currency or the privatized form of their own fiat currency digitized, or there will be corridors where the partners will prefer certain stablecoins because they will have the on-off ramp OTC relationships, or they will have certain FX partners. There's going to be a basket of choices, and those choices will only grow from here on. And because until probably recently there was no pure standard in terms of what makes a great stablecoin versus not, and thanks to S&P, providing some of their insights and now starting to even rate stablecoins, it's becoming much more I would say transparent to stablecoin providers what it means to build a great one and get highly rated stablecoins. I think we're going into a world, especially later this year and next year, where there's a plethora of different stablecoin options, and we're building our systems in a way to support every single combination of them, and we'll be able to pick the right one both based on the preference of the partner, but also based on which one can actually move with what kind of liquidity, in which corridors, and enable an operation that's more efficient and even more compliant for those receiving and sending parties. So I think we're building for a world where there could be many of those all around the world. And as Richard mentioned, Hong Kong is pushing very hard. Mika is adding their stablecoin framework into their existing framework and will roll it out later this year. US is likely going to come last, but who knows? We heard from again S&P guys and a few others that things are moving faster in Washington and might be actually available as a framework for stablecoins later this year or next year. Circle is obviously betting on that with their IPO, and more jurisdictions are adopting, including UAE, stablecoins and utilization of them in cross-border payments. So I think the world is definitely moving in that direction. We're just going to be building the platform that can enable all of those different combinations.
Yeah. Well, that's really good, guys. I mean, I don't know if there's anything else, parting thoughts or whatnot that you want to, or topics you want to touch on before we hand it over to kind of Q&A.
Santiago, you touched on deepin at the kickoff.
Yeah.
Probably we should spend some time on that topic as well.
Yeah, it's a great point. You want to take it?
Sure. From my perspective, I'm very fascinated about the deepin. And I think, the next generation of infrastructure from AI to many other things, it will be really fascinating if the broader community have an ownership, can contribute to development. And what I see is that deepin and RWA have a very natural fit because deepin is enabling, decentralized ownership of the future infrastructure. And those infrastructure are actually productive assets. And what Huma has built is allow people to be able to use their future income stream. And what we have built so far is business receivables. And what we can enable is also consumers' future income streams for them to borrow against it. So in a way, this deepin project is a very, very expensive. It's hard for them to, for people to fund them. But Huma protocol can come in as the financing layer for the deepin ecosystem. That means if you're any project, you have good income stream from those devices, and you can borrow against those future income streams, and that enable you to be able to adopt devices much easier than otherwise. So we feel very, very excited to use Huma to power deepin's growth.
Yeah, it's actually really fascinating. I've seen this type of model with like Filecoin miners,
yep,
or even Bitcoin miners, which is a huge business. Like Bitcoin miners, even more so, it's a very capital intensive business. You want to open a new mine, you have to pre-fund purchase all these ASIC equipment and then leases and whatnot, and then replace them every so many years. For deepin in particular, can you just like double click on like what that would mean for perhaps someone who is interacting in, I don't know, HiveMapper or whatever, or is buying this like dash cam or some other deepin, but like GeoNet, you need to buy an antenna. Most of these are like do-it-yourself kind of folks, as opposed to miners, which tend to be larger businesses.
Yep.
Do you foresee for deepin working more closely with the end user? How would that fit? If so, from like a credit, like oftentimes it's kind of really hard, right? There have been attempts to do credit on chain, but it's not as efficient.
Yeah.
I don't know if you can comment on just the efficiency of it, the rates, like how would this all work?
Yeah, I think this is where when we designed the Huma protocol, we built a module called decentralized signal processor, allow us to be able to connect with different signal sources for income. So in this case, right, there are a lot of deepin projects. There will be, but not all of them we will be able to power them. We will only focus on the ones that clearly have productive assets. We will define some framework about your payback period, and ideally the shorter the better, so that those type of projects would be fit the best. What we will work with will largely work with the more like a deepin infrastructure platform, so that we can integrate with them, not only providing the financing to potentially their device owners, but also integrate with them so that we can get the usage data from those platforms, and also be able to directly integrate